Looking for a stress-free way to invest without extra researching and while still receiving great returns on your money invested? Let's get right to it. In this video, we will learn about 3 dividend ETFs, one with nearly a total return annually of 16% on your money invested. First, what is an ETF? According to Investopedia, an exchange-traded fund is a basket of securities that trades just like a stock does. In this basket, you have many types of investments, like stocks, bonds, or other assets which are managed by a portfolio manager. An ETF can track in a specific sector, for example, an energy ETF, or you can have an ETF based on a theme, like an artificial intelligence ETF. Our first ETF is Vanguard Dividend Appreciation, VIG, with an impressive 5 years performance chart. Over a 14% total return annually on your money invested, with a quarterly dividend yield of 1.48%. The dividend might not be attractive to many, but with those great annual returns, it's more than compensating for the low dividend yield. The expense ratio is 0.06%, meaning you pay 60 cents in annual fees for every $1,000 invested in this ETF. Here we see how the ETF is diversified. Notice how there's no real estate, energy, or bond exposure. So as an investor, this is where you can consider adding some individual stocks or an ETF that gives your investment portfolio exposure to this sector and asset class in order to better protect your investments, to be well diversified and increase your returns over the years. But according to Morningstar, a $10,000 investment into VIG 10 years ago would now be worth $36,200. Now, very important, if you have a few exchange-traded funds in your investment portfolio, make sure you do not have duplicate stocks, especially in their top 10 holdings. You do not want to be overexposed to a particular stock, one particular sector, or even one particular asset class. Moving on, we have Schwab's US Dividend Equity ETF. The 5-year performance chart is in a nice uptrend, a 15.44% total return annually on your money invested, with a quarterly dividend yield of 2.89%. The expense ratio is 0.06%, 60 cents as an annual fee per every $1,000 invested into this ETF. A $10,000 investment in this ETF 10 years ago would now be $40,668. When it comes to diversification, we are missing bonds, real estate, and utilities. If you want to know which are the 3 major asset classes for portfolio diversification, better returns, and protection from those market drops, right over here. Finally, if you're looking for a safer investment, we have the ProShares Dividend Aristocrats ETF. The 5-year performance chart is increasing nicely. We have a 12.64% total return annually on your money invested, with a quarterly dividend yield of 1.94%. The expense ratio is 0.35%, meaning $3.50 as an annual fee per every $1,000 invested. It's worth mentioning that every company in this ETF has increased its dividend at least for 25 consecutive years and is part of the S&P 500. A $10,000 investment into this ETF 10 years ago would now be worth $27,788. In their portfolio holdings, we see almost no exposure to technology and communication sector. Exposure in those sectors is needed for a more balanced and well-diversified portfolio. All in all, ETF investing is great, but remember, past performance does not guarantee future performance of an investment. This video is only for educational purposes. We must do our own research. So which of these ETFs you think is the best, and why? Let us know in the comments below. Like, comment, and subscribe so we can continue to learn.